Let us proceed over the program. Our first subject matter presenter is going to be Mr. Zachary Kelman. He's a partner with Kelman Law, PLLC. And he's going to be speaking to you on the subject, the regulatory sandbox, making a global innovation hub. So join me, ladies and gentlemen, in welcoming Mr. Zachary Kelman to the podium. Zachary. I don't sure that this is...
Well, I just wanted to thank everyone for being here. The first thing I wanted to discuss was I was listening to Ms. Hope's speech, and it really struck me how she thought about all that's being done here, and her context was the future, young people growing up in this country, and it really struck me that everybody needs to be aware that you have to create the future. It doesn't just come to you. You have to keep in mind that whatever decisions are being made are going to vastly affect the future. There will not, in order to create jobs and create opportunities for people growing up in society, the people that will be filling these seats at some point, you have to actively create those situations. You have to make decisions bearing that future in mind in order to create the future. And if you don't, it won't come to be. Oh, okay, one second. So, I just wanted to give a couple comments on my background. I've been in Barbados for about 4 or 5 years, back and forth. I first came in to work with a company called BIT, doing their legal work. And I've been involved with this sort of cryptocurrency, Bitcoin, blockchain, FinTech world for quite a while. But I have to say that the biggest, positive thing that came to me has been Barbados itself and spending time here. I grew up and I lived in a lot of different places in the U.S., and I never really found a place that felt like home. And having spent time here, it really does feel that way, and I really have very strong, powerful, positive feelings about Barbados, and it's just been a wonderful experience for me here. As noted, I've become very involved in cryptocurrency and FinTech, RegTech, and especially from a regulatory and compliance standpoint. So I'm going to talk to you a lot about sandboxes. That's, to me, that's the main topic of this presentation. To me, I think it's going to be a really sort of innovative change for the country and for this space, and generally speaking. Now, first thing I want to do is, in mind with what I'd said before about the future and sort of being open-minded and positive and sort of progressive in terms of which direction the country can take, I want to give an applause to the Central Bank of Barbados. I don't know if people realize this, but in the past 48 hours, they announced a sandbox, a FinTech regulatory sandbox, which I think is going to be huge for the country. But I think, and I can give a round of applause, please. I think the one thing about this presentation, because I've spoken to a lot of people about this sandbox for the past several months, even years, about the potential for a sandbox, and there's a lot of misconceptions about it. And I think the first misconception people have is that the sandbox is sort of a lack of regulatory status, or there's not as much regulation. And that's really not the case. The way I look at it is, it's a bit like if you have children and they're in their teenage years and you're thinking about what they're going to do, and they tell you they want to go to a concert. And you kind of think about, okay, so I really have 3 options. Either I let my kid go, maybe they do things I don't want them to do, maybe they're in environments I don't want them to be in, or maybe there's something that can cause problems for their future and irreparable damage, you never know. On the other hand, you can say, I won't let them go at all. And if you don't let them go at all, they miss out on opportunities, maybe there's some backlash, maybe they do things you don't like anyway. But the third option is to chaperone them. And in many ways, that's what a regulatory sandbox is. I wouldn't say it's perfectly analogous, but it's in a sense, it is an acknowledgement that if you don't create an environment for innovative technology to flourish, it won't happen. You will push it off your shores. If you just allow it to happen without having any kind of control of it, and without having any awareness of what goes on, you can have irreparable damages. And so the sensible, responsible thing to do is to create an environment where there's a strong relationship, formal and informal, between the industry and the regulator, where both parties can learn from each other and allow innovation to happen without the downside. Now, it does take a lot of work. You need a lot of people to be there to help build the frameworks and learn together. It's a labor-intensive process, but that's really what regulatory sandboxes are about. So the first thing I'll speak about, obviously, is kind of an introduction to the industry that's going to be regulated, and then sort of how sandboxes have worked. Another misconception about sandboxes is people just banty the term sandbox around. It's quite new. The first sandbox in this area was in 2016. So it's not as if this is an old concept. It's still quite amorphous. It's still something that's changing all the time. The countries that are taking their own approaches to it are doing it in a very unique way. But the common, consistent thread is the fact that you have regulators becoming very aware of a new industry, allowing the new industry to flourish, building strong relationships, and putting the time in to get to know the specific businesses and their challenges, and get them ready to face what would be a brand new regulatory environment. And I'll get into this in a moment with this FinTech and RegTech stuff. One second. Okay. Yeah, so, hold on, move back. So with FinTech, we've seen an explosion in this industry in the past few years. You have many different areas. The first areas to really emerge were payment services. So PayPal is a good example. But you can see new technology that first emerged in the early 2000s where people aren't following traditional banking, but they're using the banking system to create payment systems. We've heard a lot about e-money. E-money is not a cryptocurrency. E-money is essentially the same thing. I mean, PayPal can be viewed as a form of it. You're using the back rails of the financial system to create payments between people. I could create an app, and there's many apps out there. In fact, there was a company I'd worked with in Southeast Asia who has an app where they effectively have bank accounts, and they have money that they're sort of using through this app, but in fact, it's all just accounting, and it's all being done through the banking system. Now, tokens and blockchain-based tokens like cryptocurrencies, Bitcoin's one of them, but there's many others. That's quite different. So it's not using the banking system as a back end. They built their own decentralized back end. That's the big innovation in blockchain and crypto, is the fact that they're not working through the existing financial systems back end. They've created through software its own sort of decentralized layer where the payments are happening through. So there isn't a settlement in the traditional sense, and so it presents very different challenges. Now, you can even, if you really just begin to think about this and ask questions, well, what does this mean? You realize that this area of technology, there's a reason why sandboxes make sense for it. It is novel. It presents novel problems. Just think about this fact, for example. The transactions on virtually all blockchains are irreversible. So if I do a transaction, if the money goes through, it's gone. I can't call up the bank, do an investigation, and find out that this was a fraudulent transaction. The money's gone. It's gone. You can't. There's no one there to reverse the transaction. So, secondly, how do you access these accounts? You get a private and a public key. The public key, anyone can look at it. It's on a public ledger. It records everything, and so you can look up anyone's public key and see their entire history of their transaction if you know it. And the private key is the opposite. You're not supposed to tell anyone your private key. If someone gets access to your private key, they can use that to get into your bank account and send all the money out, or your Bitcoin account, whatever you want to call it, and send all the money out. And once they do that, it's not reversible, so it's gone. Now, the other dynamic, as I mentioned, is the public key, so it's all trackable. So if you send it out and someone else sends it out, eventually they can chase the money down. But the point I'm trying to drill home is it's very new. The laws, as they had been written for every country, don't quite fit this new technology. And so that's why this regulatory sandbox model makes a lot of sense, because not only do you get to sort of wait and see how how the technology develops, see how different companies respond to these laws, but you also get to learn as a regulator which approaches are working and which ones aren't working, and it's extremely symbiotic. So that to me is a big reason why it's successful. A couple other areas in FinTech, biometrics. This is more of a KYC AML thing. Finding different ways to use the human body to prove identity. And then another part, AI, machine learning, and robo-advisors. This is something that's getting a lot more attention. I mean, if you've ever gone overseas and your bank account gets frozen, there's some sort of machine learning algorithm trying to figure out where you go, what you're doing. Eventually, if you combine this kind of biometrics and machine learning aspect of FinTech, you'll just, it's effectively the system, all these financial systems, whether they're cryptocurrency or finance, learning your behavior patterns and sort of tailoring your banking experience to you. Now, RegTech is another area. I mean, there's a lot of great AML software out there, but I would sort of look back at 2001 when the U.S. passed the Patriot Act. Since then, we've seen that's where a lot of the sort of de-risking and bank penalties and things like that have come from, because you had the creation of the requirement to be doing transaction monitoring for all these transactions, and so it's been a very difficult process for the entire world to adopt those systems, and AML software provides a great means of doing that. Another potential avenue is central bank tech stack tools. Now, if you think about all of the things that are done through monetary policy at a central bank, the aspect I'd mentioned about blockchain, of having all of these things public on a public ledger, has some real advantages to it. From an economics, from an economist's view, you can really understand how monetary policy works in a much more detailed way. You don't have to do it through brokerage and exchanging. You can kind of do it in a programmatic way where it just kind of goes out, to all the economic participants and the banks and whatnot. So there's a huge potential for central bank, implementations in blockchain. I'm not sure that any country has really done this. I know a lot of countries have been talking about doing it. China has been talking about doing it. Even India and Russia have spoken about it. I don't know of a country that's actually implemented it, but I think to everyone who is in the space and understands the technology, it's a really interesting opportunity. And a continuous audit is another thing that I think could be really interesting, which is, I mean, you all know what an audit is. A continuous audit is just, some process where all of the data, rather than in periodic intervals, is being sort of amalgamated and recorded and put into a package. You just get lots of snapshots. So there's kind of continuous awareness of the state of the company. Obviously, there's for people who work in finance and accounting, there's obviously pros and cons to that, but I can see the benefit to it. So, there's many positive things to come from cryptocurrency. And as I'd mentioned, I think creating the sandbox is a responsible approach, because if you don't create the opportunity, it will pass you. You have to be able to create the opportunity. You have to create an environment that fosters it. And the reason the sandbox is responsible is because it minimizes the risk. Obviously, at the cost of significant oversight and expertise, but it does minimize the risk. But I want to talk about the risk, because I've been working in the industry for a while, and it's become quite obvious in the direction it's taken that there are risks to it. And it comes from the fact that the area is not regulated. And in many ways, cryptocurrency is like the new Wild West. You look back at why rules were created. And most of the securities laws, for example, were created in the 1930s, and sort of came out of the Great Depression. And people were taking advantage of other people. It's sort of endemic to human society that there is a situation where people can sell people a dream, make representations about something that will happen without being, forced to comply with it. A lot of the times, it's a thin line. If I came out on stage and told you a bunch of ideas that were very difficult to prove, unlikely to succeed, and I believed them, and they didn't work out, would that have been a fraud? So it raises a lot of questions, but the point is that unfettered, allowing these kind of securities markets to just form and do whatever they want to without oversight has led to horrible problems and enough issues where large governmental bodies and regulatory bodies have been forced to step in. In my time in the space, I've noticed there have been a few projects which have really drilled this point home. So there's a project called BitConnect, which is quite famous, and it's effectively a Ponzi scheme. And they used, if you watch BitConnect, you watch a lot of the discussions of it, it looks a lot like any other cryptocurrency from the conversation. They're using a lot of the arguments you use to promote them. That's a fact that some people buy cryptocurrencies not because they believe in this big ideals or how it could be an interesting technology, but because they think it's going to go up in price. And if you go to these, for BitConnect and some of these other ones, for their conferences and meetings, that's how it's sold to you, is it's going to go up in price. They have people talking about it. They have people dealing with the concerns you might have about it. It's effectively a Ponzi scheme, and the rug was pulled out from under it back in January. So at one point, the market cap was in the billions, and this is something that was only started 2 years ago. They got their market cap into the billions, and then within the span of 3 days, it came down to virtually nothing, a few $1 million, and now it's defunct. OneCoin is the same story, except this one hasn't been done. No one's done anything with it. There isn't. These entities launching these tokens don't have the same level of oversight. It's not like you file a prospectus and you get licensed. They're just doing it. They're just doing it in the same way that someone might launch an MLM or any kind of network marketing scheme. They're just putting it out there, and these tokens are just something that they've made up, and it's not that difficult to launch it. The Billion coin is one that I came across in Southeast Asia, which to me is the most egregious. They have something called Kringle coin, which they launch in maybe the summertime, and they'll tell you that you're going to get a guaranteed 10x return on Christmas. And every year, obviously, no one gets that return. But they have Christmas decorations and things like that. That one really bothers me. But anyways, my point is that if you don't have any regulatory oversight, you get the same issues that you always get when you have none. A lot of people in the crypto space don't feel the need for regulation. They don't like it. They don't see the positive side of it. But if you don't have any of it, you will see people get taken advantage of. Another instance where regulation is needed is cybersecurity. A number of exchanges have been the exchanges have been hacked. Now this is an important nuanced issue. The cryptocurrencies themselves have not been hacked. Nobody has ever hacked Bitcoin. The ledger for the Bitcoin blockchain has always been maintained. It's virtually unhackable, and it's obvious that it's unhackable because there's a bounty of billions of dollars if you could hack it and get access to the Bitcoin, and no one's able to do it. So all the best hackers in the world are trying. That's the whole point of cryptography, is you use encryption to prevent people from being able to break the code. But these exchanges have lots of openings where they're doing transactions on people's behalf. Sometimes they're holding funds for other people, and so the exchanges are really prone to this, and some of them have been hacked. Mt. Gox, quite famously, this is very early on. This was 2014, so early on in the age of crypto, they crashed the market, and it took several years to recover. This is a Japanese-based exchange, and so people showed up. Where's my money? You end up seeing some of the things that you saw prior to the rise of the regulatory state with regard to finance in crypto, and this is just one example. So it's important to have proper cybersecurity, compliance rules, making sure people are following them. And again, the main point I'm trying to drive home is, how would you know, what government in the world could just start coming up with, here's all the rules that you'll ever need, verbatim. That's why it's important to have either a forward-looking approach where you're coming up with rules that are open-ended and building a relationship that way, or doing a sandbox where you're keeping a very, very close eye on the projects. Now, I'll talk a little bit more in depth about sandboxes. I think this, from the Monetary Authority of Singapore, really explains, I think, what sandboxes are and why they're important. So, I won't read it verbatim, but effectively it's the message I've been trying to drill home, which is you don't have a choice. A lot of people think that they have a choice about technology. We don't have a choice about technology. Technology happens. You either adapt to it or you try to fight it. Sometimes, I guess there's situations where you can fight it and win, but the wise ones figure out ways to adopt it and harness it, and ride the curve or the wave. I forget, what was the that's right. Anyways, so that's the right approach. And I put this definition in there. I don't think it's particularly useful. The main point is that it's about a relationship between the regulator and the companies, where the regulators is in the driver's seat. They're able to work closely with these companies, the companies that they allow into the sandbox, and figure out what they're doing and learn from it, and eventually get the company off the training wheels. There's a reason I use the parent analogy at the beginning. It's not because I think it's good to be paternalistic, but because for the regulator, they have to feel comfortable with what's happening. And in order to feel comfortable with what's happening, they have to understand it. And having worked at these companies, I know that there's no way they could understand it unless they have very close access to what these companies are doing. It's new. There aren't a lot of trials to turn to. There aren't a lot of academic journals about different cryptocurrency and blockchain companies and what they've done. It's too novel. It's too novel of a situation to fully understand by reading about it. It's also too novel of a situation to allow it to dissipate and not take advantage of. And that's the point. A lot of these, it's about experimentation. You want to let the companies try new things. You want to pick innovative companies coming into the space and figure out what they can and can't do and learn from it in a controlled environment. A lot of different jurisdictions have taken unique approaches. The two I think of most prominently are Singapore and the UK. But there's several others. I think UK and Singapore come to mind because they're the biggest and they've taken in the most projects. They're a little bit different. Singapore's is a little bit longer term. UK is, I believe, it's 6 months. But their approach has been really broad. They have very big teams, and they do a very in-depth look at these different projects, and they learn a lot from it. The sandbox side from the regulatory side is as much of an incubator for regulators and people that might learn about this industry as the companies are for the employees. It really is a great way of learning about the new technology. And they've had, in the UK, they had 69 applicants, 29 were accepted. Very many different areas of technology, from FinTech to RegTech. They pretty much, it looks, if you look at the selections they've made, it looks like if you took all the different types of use cases, they took one or two and are trying them out and sort of allowing them to kind of compete using local customers, not sort of allowing them to be international in approach. My first slide was of a wicket. I was going to show basically the approach you want with this sandbox is to keep things going down the line. You don't want it to go too far in either direction. It has to be kept down the straight and narrow. So you're keeping a kind of I don't want to say blinders, but you're keeping the companies down a specific path where their scope is sort of narrow. What are their targets? What is their plan? What is their strategy for this time period? And you measure it, and when it's done, you produce a report on how well they did. Singapore has been different. It's more open. I would note one of the largest cryptocurrency exchanges, Binance, which, to my knowledge, has not gotten regulatory approval in any country. They're really big. They were launched in July of last year. By the end of the year, they had higher profits than Deutsche Bank for that year, and even though they were created that year halfway through it. So they've exploded. They're just good at creating the product of cryptocurrency exchange services and listing lots of tokens. They have more of a cavalier approach to regulation and where they would like to be regulated than a lot of these exchanges do, but they've been very successful. And Singapore recently, through their investment arm, bought a piece of it and is now starting Binance Singapore. This was announced earlier this week, which is quite interesting, but it shows you that they're willing to really push much further than the UK. That's more a matter of my own opinion, but it does seem that way. But I think Singapore's approach will pay off. And I think you have to look at it as there's all these different horses in the race trying different things. Some countries have more, are more in a position to experiment and try things. Others are not. And if you are in a position to experiment and try things, it's a huge opportunity. The amount of foreign direct investment going into these projects is massive. And it's very unique, in my view, relative to previous kind of overseas investment vehicles. Because as I'd mentioned at the beginning, there is no direct relationship between the financial system and these kind of cryptocurrency systems. In fact, even the investment isn't done through the financial system. If you look at most of these ICOs, the initial coin offering investments, the money is coming in from other cryptocurrencies. So when you hear them and read the newspaper, this new ICO was launched and they raised $50 million, $100 million, $150 million, whatever it is. Virtually all of the money is coming in as Bitcoin or as Ethereum. So the whole thing's happening outside of that financial environment, and it's not something in which you could have your bank account frozen or anything like that. It's just happening. And if a country any country that tries to sort of corral it and put it in a specific box lacks the tools to do it. To me, the analogy that I think of is it's a bit like the sort of online gambling compliance situation about 10 or 15 years ago. By the way, my background is in doing anti-money laundering compliance for banks. So you saw the rise of this online gambling as an industry. And many countries had banking that are sort of the correspondent bank centers like the US, UK. they outlawed it, and that didn't stop these companies from forming elsewhere. And effectively, the companies kept reforming and moving into these locations that were outside the reach of the correspondent banking system, or the penalties of the correspondent banking system. So eventually, they continued to exist through sort of secondary, tertiary correspondent bank relationships, and they're still here. Now, the difference between crypto and this kind of online gambling from a regulatory standpoint is the fact that the cryptocurrencies don't need to have access to the banking system to continue. They're going to continue. So trying to take the hyper-conservative approach, which many countries, I mean, the US is probably a decent example, at least in terms of direct regulation, you won't stop it. It will continue. In fact, it'll continue in a direction that I don't think any previous sort of unsanctioned behavior that the correspondent banking system has tried to stamp out has gone in. I think it will flourish whether we like it or not, which is why creating regulation, creating environments where it can flourish but in a controlled way is extremely helpful and positive. So yeah, as I had mentioned, Barbados announced the sandbox. Now, one thing to note about sandboxes is they don't start off as a final stage sandbox. Oftentimes, the sandbox itself is like it's in its own sandbox. It starts off in an environment where the rules for the sandbox, the number of projects, how big it is, how in-depth it is, doesn't start off at a 10 out of 10. It starts off a bit slower. It's getting to know the industry. It's getting to start setting its rules, taking in projects in a bit of a trickle. I believe the UK sandbox was announced in 2014, and they didn't begin until 2016. So once they've gone through a few iterations, they get it going, and they're allowed to take on more projects. But my read and everything I've read about the Barbados central bank's approach has been to be very conservative and cautious and smart about it, rather than just rushing into it, and so that's been quite positive. That's the regulatory scheme. As I'd mentioned, they're not coming out with a huge, massive list and letting every company in. They're being a bit more cautious about it. And that concludes my presentation. Anyone have any questions? Glenna, yeah. I guess.
From the regulatory sandboxes that you've seen in other jurisdictions, what are some lessons learned? In other words, careful about this, or any advice you have for us as we're just about to embark on that?
Oh, you want to repeat it with the mic?
Okay. Is this on? My question was, Zachary, for those that have gone forward with the regulatory sandboxes, UK, Singapore, and elsewhere, as we're just about to embark on it, we saw the announcements from the FSC and the central bank. What advice do you have? Are there any opportunities for lessons learned already in terms of how to proceed?
I think it's useful that they have already done this because of the fact that they've taken relatively conservative approaches. I think that they've been largely successful. And so, the point I was making before about how I think that this industry is going to take off regardless of the level of regulation shows that you can be more open about it. So my suggestion is take the first period of time of the first projects that are brought into the sandbox, be conservative, learn lessons, build sea legs, and then be very open about the projects and the way that they'll come in, find a way of standardizing what you need from them and how to sort of analyze them, and it can be a huge win for the country. I mean, like I'd mentioned, the amount of foreign direct investment is massive. Having the sandbox environment creates a sense of security and safety on both sides. And if it can be mastered by having some projects that can be learned from, then it can be sort of standardized in a way, and many, many more projects can come through.
Hi, good morning. Olivia Burnett from Clark Giddens Farmer. My question is just the regulatory sandbox that has been launched in Barbados. I'm assuming that you've been able to review the framework. Do you have any concerns with the current framework that we have?
Thank you for the question. No, I mean, as I mentioned, I think it's a conservative approach. I think that I don't have I have nothing negative to say about it. I'm actually applauding it. I think it was smart. I don't think they should have been any less conservative than they are. I think not doing anything would be, dangerous, frankly. That's the thing I'd mentioned with the analogy about you're letting your kids go to a concert or whatever it is. Maybe it's not the best analogy, but the point is that if you just let things go and you don't do anything about it, there's consequences. If you try to take an overly conservative approach, there's consequences. So we have no choice but to be responsible and make decisions. And I think it was a very responsible decision. Any other questions? Okay. Sure. Okay. All right. Thank you, everybody.
That is what happens when you do an excellent presentation.
Thank you.
Thank you. Yes, I think this is very good.
All right. Thank you so much.
Token of our
Oh,
appreciation.
Thank you.